Good afternoon, everyone. I am C. Ajay Soni, and it's my privilege to serve you as your moderator for today's session. On behalf of CPE Committee, I welcome you to this 92nd webinar. We are diving into two critical pillars of modern practice: post documentation and record retention, and the new provision under the Code on Wages and Industrial Relation Code. Friends, before we start, I'd just like to introduce the CP committee. The role of a chartered accountant is no longer confined to the traditional ledger. In a dynamic global environment, our value lies in our agility. To remain relevant, we must align our expertise with the contemporary business landscape, transitioning from historical reporters to strategic advisors. The CP committee is committed to this metamorphism. We are not just maintaining standards, we are mentoring our members to explore uncharted professionals territories through high impact workshop, structured backgrounds, and by providing a platform for our young dynamic professionals to lead as thought leaders. Friends, today's session is divided into two focused technical segments. One, post-audit documentation and record retention, that will be taken by CA Payal Jain from Bhilai. And the second one is new provision under Code on Wages and Industrial Relation Code, and that will be taken by CA Chetan Agarwal. It's a matter of great pride that we have August large audience attending the event. Friends, effective documentation is the only shield an auditor has, and beyond mere compliance, this session will touch upon the mandates of SQC and SA 230, focusing on the assembly of the final audit file and nuance of the retention period. In an era of increasing regulatory oversight by NAFRA and ICI, understanding what to retain and for how long is non-negotiable. Now, I would like to briefly introduce our today's first speaker, CA Payal Jain. CA Payal Jain has around 18 years of post-qualification experience, and she is the head partner at a leading CA firm in Bhilai and into the area of sustainability and BRSR reporting, GST advisory, and strategic audit across sectors. She is personality coach for corporates. She unique dual perspective, having led both in corporate as senior manager MIS at Idea Cellular and in practice, where she spearheads regulatory reporting and audit assignment for Maharatna PSUs, cooperative institutions, and private enterprises. She is also a certified peer reviewer, GST certificate holder, sustainability and BRSR certificate holder, and many more such post-qualification course of ICI, and a passionate mentor. Her role as a moderator at the World Forum Accountant 2025 and her contribution to ICI committee reflects her deep commitment to the profession and to empower future leaders. Now I request CA Payal Jain ma'am to please start his session.
Thank you so much, CA Ajay, for all your kind words, and a very good afternoon to everyone. So, just let me share my PPT and then we start. I hope this is visible.
Yeah, ma'am.
Okay. So, post audit documentation and record retention. Here, I would like to mention your real audit is what remains after you leave the client. Why I'm saying this is because your audit quality is judged years later, not on the day you sign it. And eventually, in this 1 hour, I am sure I'm going to convince you with this. So, let me begin with a reality check over here. When we sign an audit report, we feel a sense of closure. The file is closed, fees are billed, normal in normal cases I'm talking about, the fees are billed, and we move on to the next assignment, right? But for regulators, courts, lenders, and investigators, that is exactly when the audit becomes alive. Therefore, here a very uncomfortable truth is that we believe the audit ends when the report is signed. In reality, the audit only begins when the file is closed. Again, let me tell you the reasons for this. Because once the report is issued, the client may change management, the tax department may issue notices, SFIO, ED, or MCA may start their investigations, shareholders may file suits, insolvency professionals may reopen past years, and when that happens, nobody asks what opinion you gave. They ask only one thing: show me your working papers. If your documentation is weak, your audit opinion becomes legally worthless. This is a very shrewd sentence that I'm using here, but let me be very clear that this is a truth, this is a fact that you have to imbibe in your mind, that if your documentation is weak, your audit opinion becomes legally worthless. In today's environment, audits are reopened after maybe 5 or 7 years, or sometimes even 10 years. Fraud is detected long after management has changed. Insolvency professionals dig into old files, peer review happens. So, regulators do not listen to your explanations. They only what they want is they want the documents. They read only the documents, and therefore, today's topic, as rightly said by CA Ajay, is not about compliance, it is not about academics, or it is not procedural. It is about self protection, professional survival, and litigation defense. It is about how your audit file protects you when nothing else will. So let us go through quickly through the agenda. We just have 1 hour and we have to cover a lot about audit documentation standards. We'll look into linking working papers to financial statements, retention of audit files, documentation of professional judgment, version control, and audit trail in digital files. So let us start with the foundation: audit documentation standards. Most of us, including me, before knowing about all these things, long back, say during my initial period of post qualification, we misunderstand SA 230 as a clerical requirement. In reality, SA 230 is legal standard disguised as an auditing standard. Now, SA 230 does not say keep files neatly. What does it say? It says, I have put this in the PPT as well. It says, I'm repeating the actual words here: audit documentation must be sufficient to enable an experienced auditor having no previous connection with the audit to understand what you did, why you did it, and how you reached your conclusion. So just underline these three words: what, why, and how. This one line is deadly serious. Believe me, it is highly dangerous. It means your file, your documents must allow a stranger to reconstruct your thinking, to follow the logic that you have followed during your audit period, to see through your judgments at that time, to understand your risk assessment that you have done while you were auditing at that time. So, this all requires audit documentation to be sufficient to enable an experienced auditor. They are saying there, an experienced auditor having no previous connection with the audit. So this auditor should be, not connected directly or indirectly to the audit or the audit team. And what they are supposed to be doing? They are supposed to understand the nature, timing, and extent of audit procedures, the results of those procedures that you have followed in your audit, or your team has followed all the procedures for conducting this audit, the significant professional judgments that you have made, considering all the facts, all the situations, all the figures that were presented to you, and the conclusions that you have reached. So, in short, what all these things are you going to remember? Say after 5 years, if somebody comes and asks you, will you be able to remember them word to word, or maybe even the summary? No, no human, for any of the human alive, this is not possible. Yeah. So what you have to do is your file must answer all these questions. Your file, your document should be so nicely placed, so nicely curated that they answer three questions: what was the risk at that time, what procedure did you design to address that risk, what evidence did you obtain, and why was it sufficient. Believe me, if any of these is missing, the documentation is defective. Entire session I may be using such words, but these words are really important. Why? Because these are going to put you into, understand the importance of documentation, which normally some of us negligent and ignorant about it, and they are suffering very badly. I am not here to make you, fear about it. But with today's scenario, NFRA, peer reviewers, and frauds happening with all these digitization, documentation is the only sword that you have with which you can defend yourselves. Okay, so going ahead, common documentation mistakes that happen while let me give you examples which I see in while I do the peer reviews, or maybe certain special audits or inspections. So what normally we write on the documents: verified, on test check basis. Yeah, right. Then another example I can say is checked and found okay. Yeah. Then as explained by the management, as informed by the management. We have verified the samples. Now, believe me, friends, these statements do not underline and bold, do not document anything. Are they, I mean, from these sentences, are you able to answer the question why this area was risky? Why this sample was selected? What exactly you have checked? What conclusions you have drawn? No. So what is the correct way of documentation? Let us have an example. You are maybe checking, you are verifying revenues, right? So how would a week documentation look like? It would look like sales invoices checked on sample basis. Now, can I have some quick answers wherein we see that what would be the, say, what would be the correct type of documentation for such kind of sales verification that you are doing? Okay, I would tell you some examples over here. So, what you have to do is you have to write it in four parts. First, the risk that is identified. In while you are checking the sales invoices, the what would be the risk identified? It would be possibility of year-end revenue inflation. Yeah. Now, what would be the audit procedure? The four areas that I was talking about, it would be risk identified, audit procedure that we have followed, evidence that we have obtained for, giving our observations, and the conclusion or observation that is there. So the risk identified here would be possibility of year-end revenue inflation. The audit procedure that we have followed would be selected top 20 invoices raised in last 10 days of March based on value. And what would be the evidence obtained? Evidence obtained would be invoices, but not only invoices, we have matched these invoices with the delivery challan, with the e-way bill. I am sorry. Yeah, so the evidence obtained would be the invoice are matched with delivery challans, the e-way bills, the GST returns, and the bank receipts. And then after analyzing all these things, after observing them properly, we have come to observation or conclusion that revenue recognized is in the correct accounting period. Now this tells a future reader, a reader, investigator who is reading your documents, your files after say 2 years maybe, they understand the risk. They also understand your applied professional judgment and how you obtain corroborative evidences. So this is defensible documentation. This also means one very uncomfortable thing, and that is your memory is irrelevant. As I already said, your intention is also irrelevant. Your oral explanation is also irrelevant. Only what matters is what you have written, what your files are saying, what your documents are saying. In further slides, we would also, see how these documents are to be properly kept, how they should be, linked to each other, and all those things. So then, going ahead, linking working papers to financial statements. This is very, very important. Here, the rule is very, very simple but very intricate as well. Every number that is there in your financials must be traceable to a working paper. So, every number that is there in your trial balance, in your balance sheet, or in your notes to accounts, it should have a backing paper in your working paper file. Yes, and every working paper that you are keeping in your file, it should point to a number in the financials. Yeah, so this is actually in I normally call it as a bi-directional linkage. Technically it is also called audit trail integrity. This is one of the weakest areas in audit practices normally that I see when I peer review or inspect other documented files. So most audit files are normally what they are, collections of documents, not logical audit evidence chains. How does an audit file look like? Yeah. uh, what would be a normal audit file be? What would you find in a normal audit file? A working paper file, a trial balance, some ledger printouts, some Excel sheets, some random checklists, some query sheets, some observations that is there. Yeah. But this is not the way you keep your documents, you keep your files. Example again. Now your balance sheet shows your means a client's balance sheet which you have audited shows a trade receivables of rupees 12.80 crores, say. Okay. And your audit file should allow a regulator to trace how, I'm telling you, how you should keep a track of these 12.80 crores, the documents. What you have to do? Rupees 12.80 crores. you have a note number there against this trade receivables. Yeah. Now this note number should be traced to a aging schedule. And this aging schedule should be backed with a confirmation or some subsequent receipts, right? In case you have made some provisions in this 12.80 crores trade receivables, there should be a management estimate and also auditor's evaluation for keeping this provision amount including in this 12.80 crores, right? So this is how your entire documentation is complete for this one single figure that is there in your balance sheet. So if a regulator asks, how did you conclude that there is 12.80 crores recoverable in this particular client's balance sheet? So your file must answer this automatically. You just have to, point out to the note number and the note number that is backed with a working paper number. You don't have to speak that. This should be there in your file. Now, normally where we go wrong is there is no cross references put. Yes, the Excel files are floating without any identifiers. They are, waywardly. Even the names of the files should be properly named with proper references and proper note numbers and proper content that is there. It should be representing the content that is there in the Excel file, right? Then the trial balances are sometimes, I'm sorry to say, but are not reconciled with the financials. The adjustments that have been made, maybe the post audit adjustments, or maybe certain adjustments which require decisions by auditors or views by auditors, they are not properly documented, or they are not properly backed, or maybe they are not, they are just verbally discussed with the management. So if figures don't be backed, the assumption is auditor did not understand the numbers. These, I am not saying that the auditor is not understanding. I am saying it is presumed. It is, if, because there are no documents to prove that, right? Nobody is going to rely on your words. So it is presumed that the auditor did not understand the numbers and there is no proper backup for it. So what is the best practice over here? I am, running fast because there are three, four more areas that we have to cover. So it is, I'm just giving you the summary of each. So the best practice that should be followed while linking these working papers to the financials is that each working paper should have a reference number. Immediately in my office, everyone, we have put inculcated this habit. As soon as you get the document, just check with it. Is there a timestamp on it? If not, put the timestamp, the date, and the person who has collected this document. Yes. So there should be a reference number on each working paper. Each financial statement note should mention this working paper reference number in the financial note. So this way you connect the financials to your working paper. The changes that are made, they must be tracked and explained, and that is why I said that when you take the working paper, write the time also. Many a times I have seen in many audits, in a day the documents have changed, the documents have had results of adjustments and amendments, that the documents have changed in a year. Let me give you a very fresh example. Just 1 month back, when I was auditing in a government company, and we were finalizing the certain financials, so the trial balance has changed thrice in just a span of 2 hours. And thanks to my colleagues, my staff, that they were working, they had put up the time, and therefore, it was easy for us to check the most latest one, right? Then the final figures should, must definitely reconcile with your trial balance, the final trial balance. Because why I'm saying this, I have experienced it, and I have experienced it very bad. As I said, the trial balance changed in a span of 2 hours, and we were trying to connect the older version with the final financial statements, and they were not reconciling. And just imagine how boggled we must have been. But thanks to the timestamps, we could reconcile with the correct trial balance. So this discipline converts an audit file into an evidence, and it does not remain a paperwork. Going further, retention of audit files. Now, here, friends and colleagues, let us be very, very clear. Audit files are not at all your property. They are your legal defense files under Companies Act, under ICAI, under NFRA, under peer review, under civil codes, and whatnot. So many regulators hanging on your heads. Now, let us talk about how long you should retain audit files. You are expected to retain audit documentation for at least 7 to 8 years, depending on the type of audit, like internal audit, forensic audit, statutory audit. Every audit has different time spans, but minimum it is at least 7 to 8 years. In some cases, you have to go beyond 10 years or more. Why? Because we have already started with this our session, that most of your actions, professional actions, arise after certain years, after the regulators and investigators start their work. So after fraud detection, which may happen maybe after a year or a two, after insolvency of the entity, after the management has exited or changed, after the lenders have suffered losses, and who is left over here? Only the auditor, because others all vanish. And the first question that is asked to the auditor is, what did the auditor know at that time? Say 3 years back, say 5 years back. What did the auditor know at that time? And it is not possible for you to remember, or for me to also remember. And it is not possible to again create all those documents. So it is very essential that today, when you are auditing, collect every evidence, collect every possible document. Only your file can answer this question: what did the auditor know at that time? And believe me, a missing file is a professional suicide over here. Let me, share a real life scenario over here with you without disclosing any names. A company was audited in financial year 2017-18, and a fraud discovered in 2024. Believe me, the promoters absconded, and only a auditor was summoned over here. And if at that time the file would have been missing or incomplete, the auditor would have been presumed as negligent. None of his explanations would have carried any weight, or he must have faced heavy penalties or suspensions or maybe litigations. But thanks to proper documentation, proper evidence, he could answer all the questions. In fact, he could help the investigators with uh, discovering and identifying the fraud properly, and getting the promoters, not only promoters but all the people who were involved in that fraud, getting them in hands, and getting them proper penalties and punishments to be taken. So retention is not about compliances, but it is about future survival. So retain your file at least minimum for 8 years, according to the audit that you are doing, the type of audit. And even here, again, I would say, even when you shred them, you dispose of your documents, keep at least a summary backup for next 2 to 4 years, again, for just to be assured that nothing else is yet to be answered. You can just keep small summaries, or you can just put them in a hard disk or maybe a pen drive, and just name that pen drive and keep it there in some corner of your office. This would help you definitely. Then, going ahead, documentation of professional judgments. This is the most important part of today's session. It is actually a heart of today's sessions. Many a times audit fails not because procedures were wrong, or not because you did not follow proper lines, or not because you did not follow the processes properly, or you did not take the documents properly, or you did not take a proper judgment, but because these judgments, these decisions, or these conclusions or observations that you had taken up were not properly documented. So let us have some judgment areas over here. If anybody can just put in the chat box what are the normal areas of judgment that we have while you go for any general audit. Some basic judgment areas that you have to put in while you are auditing. Okay, fine. So normal basic judgment areas that you have to apply for every what you say, every audit or every concern that you are going into, every entity, are basic ones: the going concerns, the provisions and contingencies, the revenue recognition, the valuations, the related party transactions, and the management overridden. Yeah. So your files, your documents must have, it must show all these judgment areas that you have applied to your audit. Yeah. It you just don't presume that you have applied all these judgment areas, or you have done your audit, you have completed your audit presuming that all these things are properly done, or presuming that you have that we have followed all these principles of accounting, or followed all these principles of auditing. Just don't presume that. Let your file, your documents speak about it. And how will this happen? How will this show? How will your files show this? What you have to do is, you have to document the things, what alternative views were there for certain area that you were talking about. Say provisions and contingencies, you were thinking about, if you want to take this certain amount. Say there was certain litigation going on, maybe with a GST department. Some notices were passed out, and for that some refund was to be taken up, or some penalty was going to be charged to the company. And you were thinking about, should you take it as a provision or you should take it as a contingency? Should it be above the line in the balance sheet, or should it be a part of your notes to accounts? So these are the various alternative views that you were thinking about, and then you come to a conclusion that no, this is assured penalty that is going to be charged to the entity, and let's make a provision for it. So just it is a very simple thing. What you do is just write a 3-liner, 4-liner short paragraph, and put it in your file, maybe digital in Excel file, or maybe just take a printout and keep it there in your file, and give a reference number to this working paper. to this note that this relates to the provision that is made in the balance sheet. Yeah, and besides that provision that you have made, say of 10 lakhs, just write beside it. Thus, the explanation to this provision amount is written on this working paper. Yeah, so just write about the alternate views that you have considered while coming to a conclusion to a certain amount. Yeah, also keep in mind the management position that was there, it may change, the management positions change in, say, maybe even 6 months and 1 year, the positions change. The person who has started as a startup, but it boomed like anything, and in a year he or she was earning in, maybe he just was very lucky to crack the Shark Tank, and the turnover which has started as a startup for with 50 lakhs turnover had gone up to 5 crores maybe. So management position changes, and as the position changes, the situation changes, the decision power also changes. So what was the management position when you had taken this decision, when you had taken that audit, when you had completed the audit? Just make a proper note of it with a proper documentation. The challenges that were there while you were coming to some conclusions, that this can also be scripted in your documentation. Why you accepted a certain thing or rejected a certain thing, just all these because these are all the views that you have taken up, considering various facts, figures, and situations that was prevailing at that time, at that moment, at that period. Yeah, so all these things should be there properly documented in your documented file, in your working paper file, so that many a times it happens with me also, that at a certain point in a particular year, in a particular situation, I take a decision, but in same situation, maybe next year I change my view, considering various other situations that have added, or maybe considering the various amendments that have come. So that is why it is always good to keep all these judgment areas also documented, so you remember to refer them when next time again the same situation arises. Yeah, so what is the golden rule over here while you are documenting for the judgment areas is, if the judgment is not documented, it is presumed that no judgment was applied. So remember this, and therefore even the judgment areas, even the valuations, the related party transactions, the management things, always management overridden also, always document them also. Let us take a example again over here. Particular management was saying that this case is not at all material, and we do not require to make a provision for the balance sheet. And what would be the documentation here? In the worst scenarios, what would be the documentation here would be, I have considered the management representation. I have obtained the management representation sealed and signed on a letterhead, that the management is saying that this amount is not material and should not be given the provision for in the balance sheet or maybe the financial statements. This is absolutely a weak documentation. So now let me tell you how a strong documentation look like. A strong documentation looks like a case summary is prepared, the amount that is involved is also written there, the probability assessment that we have made as a team, as an auditor, and also consulting the management, that is also documented properly. Any legal opinion if taken, or expert opinion if taken, that is also documented there. The auditor's independent evaluation is also summarized and scripted and written there, and then the conclusion that has come with all the rationale, with all the backups, it is there, that is written there, and this is entirely called as a very strong, proper, perfect documentation. This shows that as an auditor, you have challenged the management, you have considered the various alternatives that were available, you have also applied your professional skepticism, and then at finally you have come to a conclusion. So this is completely becomes your defense file. And why this matters, why this is so important, because when you go to regulators, or when somebody comes to inspect, or somebody comes to investigate, they do not understand auditing standards, they do not understand what you are trying to explain, they do not understand what intentions you had, they do not understand what situations were prevailing. The only thing that they understand is the logic and the evidence. So your working paper should be like a story, an entire story, which has a starter. It should be a entire platter on your table. It should be a 7 course meal, starting from the starter up to the dessert. Yeah. So your working paper should consist of what was the issue, what were the options available, why this decision was reasonable at that particular time, and that is why it was considered. So you not only have to keep all the traces to the document, but also why a specific decision was taken or not taken. And all the proper case laws and other evidence should also be available in your file. Yeah. Going further, yes. So version control and audit trails in digital files, with all this digitization and AI environment, this is a very important thing that you have to keep in mind in today's scenario. Most of the audits today are digital, and sorry, believe me, these digitization has brought a lot of convenience to with it, but definitely it has brought new types of risks, new types of evaluations. And with this AI development, when you'll be doing the certificate courses of AI, you'll understand that there is tremendous regulatories and risks involved while you are doing digital documentation with you. Yeah. So the key questions what have been asked here are: when was this document created? Right. A very absurd question, you may feel, but again, this is a very important trail that is there. While you were having paper documents, they had timestamp, they had like if you had made an agreement on a stamp paper or something, so it had its own way of saying, the document had its own way of saying that yes, I am not created after the fraud has been conducted, but it was there way long years back, right? But with digitization, this is not possible. Every time you open your file, and you just, even if you do not change anything, but if you just press that save button, the time modified of that file changes, right? So you have to have that trail back to the documents to show that this document was not created, but it was available right from the inception, right? Then who reviewed this document? It is very important. Was it reviewed by some very junior person, or by the senior person, or by the partner, or who has provided this document from the company point of view. If you say that sometimes the management says that this document is not valid because it is not been provided by the particular person who is concerned or related to this document, so this is not a valid document, they deny about it, right? So that is why it is very important that who has provided the document and who has reviewed it. Was the document altered later, or it is as it is? Was this document backdated, or it is created to date? So these questions are very important. If your file cannot answer these questions, then the credibility of these documents are questioned, and the credibility, believe me, collapses like anything. So your audit file must show the date of preparation of the documents, the date of review, and who is the reviewer, the date of providing the document, and who provided you, were that person authorized or not, the changes made, and the final sign off. Yeah. So at various steps, the changes that have been made to the soft documents, to the digital documents, can be traced out. There can be kept an audit trail in to track the various changes, and the final sign off is the must ingredient, like a salt in every food. It is very important that you sign off once the audit is completed. Lock your document. The final sign off is very, very important. Lock this document for all the future changes, for all the future access, everything. If Excel files keep changing with no trail, the file becomes unreliable. And for information, I would like to mention here that trails can be established in every software, every software, including Excel files also. Audit trail can be enabled, and it automatically gives you the report, wherein it says which changes are made by whom and when. And it becomes a proper, very good changes report documentation for your audit. You can ask your IT person to help you with this, and please enable this in every audit that you are doing. In litigation, they will ask, was this prepared before or after the fraud was known? And without version control, without audit trail, without track of the documents, you cannot prove anything. So it is very important to have the audit trails, the track to the working papers, to keep them intact, and lock the file once the audit is completed, once the assignment is completed. So let me just summarize certain best practices that you can follow while you are into digital kind of audit, and you are keeping digital files in your uh, office with for various assignments. So most important thing is lock the final audit files after the sign off, after the completion of the assignment, after the completion of the audit. Just lock it for every future access, as well as every future changes. Very, very important. Every folder, every file can be locked. Just get it properly learned. In fact, even if you search it on the various search engines, you will know how to log the files and folders. It is very easy to do it, but just make it a discipline, make it a ritual in your office, that once the assignment is completed, lock these files. Then maintain date stamps, that I had already told in the previous documentation thing, that maintaining how important and very cautious way of doing audit this is. It is really beneficial to maintain date stamps and time stamps. Maintain the reviewer comments as well. Keep the change logs that happen. It is very, very important. While you, as I said, now when you just enable that audit trail, the toggle in every software that you are using, be it Word, be it Excel, be it Power BI, be it any kind of tool that you are using for your audit. Just the first thing that you do is enable the audit trail, enable the tracking pattern of your document. So this way, that if if you are working on an assignment, say maybe for a month or maybe 2 months, it may happen that you may not remember why this change was done or when it was done. So it becomes easy with all these change reports, change logs, that you understand when the change is done. In fact, you can also put comments over there, and you understand how or who did the changes and why they were done. In fact, in the comments you can also back them with the documents and evidences or certain case laws that you have applied or certain judgment areas that you had applied, and keep this entire change log report, entire audit trail report as the perfect documentation for your assignment or your audit, right? Avoid overwriting files. Many a times it happens that there are different versions of files. So just name them like with a date or maybe with a time, or maybe simply just like what you can do is internal audit report 1, internal audit report 2, internal audit report 3. This way, don't overwrite the files again and again. Make a copy and keep them intact. Believe me, this is not collapsing, or this is not using your data storage. It is not blocking your data storage. In fact, it is using your data storage effectively. Many a times when you overwrite the files, and afterwards when you are sitting there for finalization, or maybe for concluding your assignment, and then you understand that the first file had certain figures or certain values or certain comments which were very important and should have been included in the at the final stage, and because of overwriting, those files are no longer available with you. So always do not, maximum possible, avoid overwriting of files. In fact, create different versions of files. So as I would like to say over here, digital convenience without controls becomes digital evidence actually against you, right? So in case if we do not have any questions over here, I would like to conclude. Let me leave you with this, that your audit report is only one page, but your audit defense should always be 3,000 pages. It should have a proper backup, a proper case laws, the evidences, every possible minute thing can stand for you as a witness. Courts do not decide on opinions, but they decide on documentation. The quality of your audit is not what you remember, but it is what your file proves. So, years later, when nobody remembers your explanation, your meetings, or your intentions, they only read what you had written. So, do not audit for today, but audit for the day when you will have to defend yourself. So if we have certain questions, I would be happy to answer them. So I would be Okay, I am really thankful to CP committee for organizing these webinars. They are really fruitful. I am also thankful to all the officials that are involved in making these webinars a success, the technical department and all the other officials as well, who curate such beautiful topics and gives opportunity to the speakers like us to, deliver over here. Thank you so much. Thank you, Ajay ji, again for moderating this session. And over to you back.
Thank you, ma'am. Present, we
Okay,
are
ma'am.
having two questions. So
Okay, tell me.
we are thankful to CA Payal ma'am for such a wonderful session. And she has clarified that not only the conduct of work and forming opinion is important, but it is also important that we have proper record keeping and documentation to show how we have arrived at the result. Friends, digitization is good, but at the same time, we should take care of that also. Ms. Payal has emphasized the importance of SA 230, what, why, and how. We are thankful to her. Now, we would like to move to our second session of today. It is new provision under Code on Wages and Industrial Relation Code, which will be taken by CA Chetan Agarwal. Friends, it's a matter of great pride that at present around 550 participants are attending this event. Now, moving to the next topic, as India moves towards streamlining its complex labor law, the new code represents a paradigm shift. We will examine the technical definition wages, which now caps allowance at 50% of total remuneration and subsequent impact on PF and gratuity. We will explore the industrial relation code, focusing on the new threshold for the layoff and retrenchments that aim to balance ease of doing business with employee welfare. Now, I would like to briefly introduce CA Chetan Agarwal. He is a qualified chartered accountant with graduation and post graduation from Rajasthan University and has 4 years of specialized experience as a labor law consultant. He has a strong experience in Indian labor legislation, including the Industrial Disputes Act, Shop and Establishment Act, Factory Act, Contract Labor Act, New Labor Code, Social Security, and has played a key role in the labor law audit for major corporate and non corporate clients. He advises organization on labor law compliance, HR policy drafting, statutory register and returns, and represent employer during labor inspection and proceedings, ensuring practical and risk mitigated compliance solutions. He is also actively involved in training students and professionals on labor laws and payroll compliance with a focus on simplifying complex legal provisions and their real world application. Now, I would request Sri Chetanji to please proceed for session.
Thank you, Ajay. First of all, I want to extend my sincere thanks to our chairman, sir, C.A. Satish Gupta ji, Vishnu Agarwal ji, sir, and Ashok ji for moderating this session, and of course the audience. So today our topic is on impact of new labor codes, and especially we will examine the impact of four codes. No, not four codes, but only two codes out of four, which is Code on Wages and Industrial Relation Code 2020. Okay, so as we all know that on 21st of November 2025, the central government has implemented all four new code in practical sense. Okay, and the codes are the Code on Wages 2019, Industrial Relation Code 2020, Social Security Code 2020, and Occupational Health, Safety and Working Condition Code 2020. Okay, so these codes are drafted and get approved by president uh, at very early, that is in 2019 and 2020, but due to many reasons the government did not implemented these codes on practical sense. Okay, so now in November 25 the government has finally implemented, and the draft rules are also issued by the government on 38 and 31st December 2025. These rules will be finalized hopefully in the month of Feb and or in March. And from 1st of April 2026, all four new labor codes will be effectively implemented. So now we will move that what are the changes under, what are the new provisions under the code on wages 2019. Okay, so first of all we would say that the government has focused on equal remuneration. Okay, so there are various type of employees, like fixed employees, permanent, we called these permanent employees, temporary workers, contractual workers, okay, gig workers, and a new term was also introduced through industrial relation code, that is fixed term employees. Okay, so the focus of government is that why different wage is to be payable for different category. Okay, for a single type of work or for same type of work there should be a equal pay and same pay. Okay, so under code on wages the government has implemented that all the employees will be get equal pay, equal remuneration, equal benefit in all terms. That a permanent employee, whatever gets, that will be given to their contractual worker, that will be given to their temporary workers, and also government has also included the transgenders into this category. Okay, so now transgender persons will also covered under equal remuneration, and these will also be get the equal pay as payable to their permanent staff or their temporary staff or contractual staff. So this is the one of the important move toward equal remuneration. Also government also focused that the temporary and contractual worker will get the all the benefits in equal way. That is for example, if the uh, permanent staff gets dresses, okay, so employer have to pay dress provided, employer has to provide these dresses to contractual staff also, if the if these dresses are provided by employer to permanent staff at free of cost. So employer will provide such dresses to their contractual or other persons or other employees at free of cost only. The next move in the code on wages is that the definition of wage has been changed. Okay, earlier if we talk about PF, so PF is being charged on basic pay. Okay, uh, as per EPF Act, the PF will be payable on basic salary plus DNS allowance plus retention allowance only. Okay, so if we talk about private organizations, so there are no DA and retention allowance. So in simple words, we can say that PF is payable on basic salary. If we talk about ESIC, ESIC is payable on gross pay. If we talk about gratuity, there is other calculation. If we talk about bonus, there is other calculation. So there are so many benefits including social security, including temporary benefits, including retrenchment benefit. So the calculation of these benefits uh, differ from due to the calculation of wages. That is, other many benefits are payable on gross wages, many are on basic, many are on other calculations, through other calculations. Now the government changed the definition of wages and drafted uniformity. Okay, so now all these benefits such as PF, ESIC, bonus, gratuity, etc., all the benefits will be payable by an employer on such wages that was given under section 2 subsection 88 of the Code on Wages Act. Okay, so we will read the definition of wages. First of all, we will see from the Bare Act. Okay. Okay, so as per section 288 of sorry, I would strongly mention that Code on Wages, that is the Code on Social Security. Okay, so wages means all remuneration by way of salary, allowance, or otherwise in term of money or capable of being so expressed. Okay, so first part is clarificatory part and includes, there are three terms which are included in wages, that is basic pay, dearness allowances, and retaining allowances. Okay, so we all know that what is basic and DA. The retaining allowances means anything paid to or payable to employees to retain such employees, that is payable by employer without work. Okay, best example is that in COVID, employers paid to their employee without having work or without using the employment. Okay, so the retaining allowance, we can say that is not a recurring term. So wage includes basic, DA, and retaining allowances. Again, the definition have an exclusion part also. What is excluded from the wage? That is any bonus payable under any law, the value of house accommodation, any contribution paid by employer to any PF and provident fund, any contribution, sorry, any conveyance allowance or the value of any traveling concession, any sum paid to employed person to defray special expense, house rent allowance. And other is remuneration payable under any award or settlement between the parties. Next is any overtime allowance. Next, any commission payable to employees, any gratuity payable, and retrenchment compensation. Okay, so government fixed the definition of wages, that wage will be basic pay, dearness allowances, and retaining allowances. Also clarified that these terms will be excluded from the definition of wages, which are bonus, gratuity, conveyance, house rent allowance, different special allowance, employer share of PF, etc., etc. Now the government has also clarified that still there is no condition of minimum basic and whatever. But government has clarified that in through proviso that if the first part, that is inclusion part, that means three terms: basic, D, and returning allowance. If the first part is second part is more than the 50% of total wage, okay, so the excess part will be added back to the first inclusion part, okay. So we will see the definition through two parts, that first is inclusion part and second is exclusion part. If the exclusion part is more than 50% of total wages, then the excess of such will be added back to the inclusion part. This was clarified through the proviso that provided that for calculating the wage under this clause, the payment made to the employer of employee under A to I. Okay, so basically, this will exclusion part will not include retirement benefit, that is gratuity and retrenchment, except these. There should be maximum cap, which is 50%. So now, 1 second, I'll share my PPT again. Okay. So the government has changed all the applicability or all the monetary limits of many law, that is ESIC calculation, gratuity calculation, bonus calculation, through new definition of wages. Now all the provisions of new labor codes will be done or will be complied through the new definition of wage. For example, the limit of ESIC coverage is 21,000. That if an employee is earning more than 21,000, is automatically out of coverage from ESIC. Okay, so let's suppose if earlier an employee was drawing wage, okay, gross wage was 30,000, so he was out of coverage, he was out from ESIC. Now if we plan our new wage structure, okay, as per new labor code, so there is basic should be at least 50%, which was technically right, that it is not directly mentioned in the act, but through this proviso we can conclude that basic should be at least 50%. There is no requirement of no upper cap of basic salary. You can keep 60%, 70%, 80%, or even 100%, but minimum side there should be at least 50%. If we keep higher basic, then all the benefits will be paid on such higher wages. So generally the corporates or other organizations having more employees generally fix the basic is or at 50% only, due to less cost, less compliances cost. Okay, so if for such employee drawing 30K salary, earlier was not coverable under ESIC Act, but now due to the definition change, if we plan our basic at 50% and for other allowances, if we keep 50%, so now the his basic salary will be 15,000. Now ESIC will be applicable to that employee also. Okay, due to the change in definition, now the limit of 21,000 will be applicable on wage, not on their gross salary. So the definition, uniform definition will be an issue for an employee uh, through implementation, at implementation stage only. After that, it will be on routine. Same like gratuity calculation. Earlier we calculate gratuity on other amount. Now we have to calculate gratuity on such basic ways. PF calculation. Earlier there was no restriction of minimum basic. We can say that employer generally keeps basic salary at 30%, 40%. So now they have to keep their basic wage at 50%, minimum 50%. So uh, their PF liability, okay, employer share will also increases. Next is universal minimum wage coverage. Okay, earlier every state government, if we talk about earlier law, okay, before implementation new labor codes, all the state governments generally issue minimum wages notification in their respective states, okay, and these wages are revised half yearly, annually, sometimes more than a year, okay. Due to that is the word labor is the subject matter of concurrent list, okay. So lawmaking authority for labor is center as well as state government, okay. And the fixation of minimum wages is with state government. So every state government issue minimum wages in their respective state. Now the government moved through uniformity for minimum wages, and government implemented a new provisions which is called national minimum wages, or we can say floor wages, that central government will now issue a minimum wages which will be applicable to all the states, or we can say in whole country, and every state government have to comply such national minimum wages or floor wages. A state government can fix or can decide minimum wages in their state uh, upper side from such national minimum wages, but cannot go below that level. That is that national minimum wages issued by central government. The government will issue right now. There is no notification about such minimum wages that was universally accepted by all the state government, but central government very soon will release these national minimum wages which will be accepted and which will be followed by all the state governments. So the new feature is national minimum wages. Next, government also emphasize that minimum wages will be payable to all the employees. Earlier, if we talk about pre new labor code scenario, so there was not a system that all the employees or all the workers are covered under minimum wages. In some states there are specific category for specific workers. In their states there are general category. In some states there are very low minimum wages. Now the government put pressure on this fact that state government will cover 100% workers under minimum wages act, okay. I mean minimum wages provisions. So now all the workers in the state, okay, whether they are from any field or they are from any category, they are from any type of work, all the workers will get covered under such minimum wages, and they will get at least minimum security so that they can uh, get benefit, or they can get proper wage. Next, important changes under the code on wages is that timely payment of wages. Okay, so as per Payment of Wages Act, as per earlier Payment of Wages Act, The time limit for payment of wages was that if an employer have less than 1,000 employees, then he has to pay on or before 7th of next month. The wage should be payable by employer on or before 7th of next month if the employee size is up to 1,000. Okay, if on 7th there is a holiday or Sunday, then employer have to pay wage on 6th. If on 6th there is also holiday, on 5th, on 4th. That is, in any condition, any situation, the employer cannot go beyond 7th of next month as per earlier payment of wage act. Okay, and if the employee size are above 1,000, then employer need to pay on or before 10th, and the same provisions are also applicable that if that whole there is a holiday on 10th or Sunday on 10th, then employer have to pay on 9th or 8th or 7th. That is, in any case, employer cannot go beyond 10th. There is also one provision that the employer has to issue pay slip to their employees at least one day before salary disbursement. Okay, so let's suppose if the employer is paying salary on 7th, then employer has to pay salary slip on 6th to all the employees. Now, if we talk about new labor code provisions for payment of wage, so there are four limits. Actually, if there in new labor codes, the provisions are made as per convenience of employers and employee, due to the fact that employers are now paying half weekly wage or fortnightly or daily wage. Okay, so if the employer is paying wage on daily basis, then employer has to pay at the end of that day only. Okay, if we are talking about new labor code provisions for payment of wage act. So if the employer is paying wage on daily basis, then employer has to pay at the end of that day only. Okay, so if let's suppose if employer is paying wage of 1st Jan, then he has to pay at the end of that day only. He cannot pay wage of 1st Jan on 2nd Jan. And if the employer is paying the wage on weekly, okay, so employer has to pay at the end of that week only, not next week. So if the employer is paying salary for the week, that is Monday to Saturday or Friday, whatever, then he has to pay on Saturday or Friday. Okay, there is also one thing that in weekly payment, the wage payment should be on working day. Okay, so if there is a 6-day working, then he has to pay on Saturday only. For Monday to Saturday wage, employer has to pay on Saturday only. And if the employee was engaged in 5-day working, then employer has to pay weekly wage on Friday only. Okay, he cannot pay in that case Saturday or Sunday or in next week. So for daily payment at the end of day, and for weekly payment at the end of the week, and that should be working day. For fortnightly payment, there are many companies which are paying salary twice in a month. So if the employer is paying for 15-day pay, okay, so the employer has to pay on or before, within 2 day, we can say within 2 day from the end of that period. That period means that 15 days cycle. Okay, let's suppose if the employer is paying wage for 1st to 15th, then he has to pay on or before 17th of that month. And if the employer is paying wage for 16 to 30 or 38 31st, then he has to pay on or before 2nd of next month. That is, within 2 day he has to pay all the wage payable or all the wage outstanding. Next, if the employer is paying wage on monthly basis, then he has to pay on or before 7th of next month. There is no the limit of 10 days, which was earlier mentioned in the Payment of Wage Act, was removed by new labor codes. Okay, so uh, if the employer is paying on monthly, he has to pay on or before 7th, and the same provisions are here also, that if on 7th there is a holiday or there is a Sunday, then he has to pay on 6th or on 5. Now there is also one important change in under the code on wage, that earlier, as per the Payment of Wage Act, uh, there was a provision that if any employee was terminated by employer or was retrenched by employer, then employer has to pay within 2 days. Employer has to clear their uh, outstanding within 2 days. Okay, but this was not applicable to in case of resignation. I'm talking about earlier scenario, that is before implementation of new labor codes. So earlier, if a employee was terminated, then employer has to clear such outstanding wage within 2 days from the date of termination or date of retrenchment. Okay. Now, under new labor code, that is code on wage, such provisions has also added the term resignation. Okay. Now, if employee is resigned, the retrenchment and termination is also there. Okay. Now, resignation is also added, that if employee is resigned, then also employer have to clear their outstanding wage within 2 days from the date of such resignation. Okay, resignation here, resignation date means that the date of his last working day. So that is also an important change under the code on wage, that the employer has to clear their due within 2 days from the date of resign, that is date of last working day. Now there are some other provisions, that is women workers, female workers now entitled. Uh, actually, I'm talking about the crux of all four new codes that were important for studying the code on wage also. Okay, so there are some other acts provisions, but these are relevant to the code on wage. Okay, now so female staff or female workers are now uh, eligible to work in the night shift also. Earlier, there was some restriction that the employer has to get approvals from the concerned authority before employment of female staff in night shift. Now the government relax the employers, that the employers can hire female staff and can use their employment in the night shift also, provided their consent should be taken properly. That is, I can say that their consent should be in written, or and proper security or safety arrangement should be there. Like there should be CCTV, there should be proper fencing, there should be cab facility that from office to home, home to office. So now female workers are also entitled to work in night shift freely. Furthermore, male and female staff who are also treated equal under the Equal Remuneration Act, that was merged or repealed under the code on wage. Now, female staff or female employees will also get equal pay for the equal work which was done by male staff. Okay, there are other some other provisions also, that the employer cannot discriminate by gender in recruitment process also. such as earlier, if we talk about advertisement in newspapers, that there are clearly mentioned that only female can apply, only male can apply. So now the government has restricted that gender discrimination in recruitment is not allowed. Now employer cannot uh, advertise these advertisements such as only male staff required for a specific post or only female is required. There are some other minor change. Earlier, uh, if we talk about minimum wage, okay, so in some state there are different category of minimum state, such as basic pay, variable da. In some state there are simply minimum wages defined by the government. Okay, so that creates a conflict between employers and uh, department, that vote should be included as per minimum wages. However, there are some case law also from high courts and supreme court that minimum wages should be gross. Okay, but still there was some confusion that in minimum wages the what elements are included, that only basic or there are basic hra and other allowances. Now the government clarified that hra is excluded from minimum wages. Now hra will not include from minimum wages. The government, if the government will issue minimum wages, then automatically it will be treated exclusion by excluding HRA. Okay. The other important change is was for from code on social security, but the impact will be on code on wages also, which was changed in gratuity. Earlier, the calculation of eligibility of gratuity is that if an employee uh, complete 5 year continuous service, then he is eligible for gratuity. Okay. Now the government categorize three category for gratuity eligibility. The one is fixed term employees, which was newly term inserted under industrial relation code. Fixed term employees means that employees that was hired for a particular period of time, and that time is fixed and certain. Okay, also that the fact of that fixed term or the certain period is also written in their appointment letter, or we can say that there is a written proof of fixed term employment. So let's suppose if employee is hired for the period that first Jan 2026 to 31st March 2027. So now he will be called fixed term employee, just because the tenure of that employment is fixed and certain. Uh, Also, uh, the contract labor cannot be fixed term employees, just because if the person is contract labor, then he can be fixed term employee or he can be contract labor. So a new category was inserted in new labor code, that is a fixed term employee. Now fixed term employees are eligible for gratuity only after 1 year continuous service. Okay, if an employee, that is fixed term employee, complete 1 year of continuous service with an employer, then he will be eligible for gratuity payment. Okay, and this is not applicable for their permanent staff, their contractual staff, or their other staff. This is only for fixed term employee. Other provision is that
Sir, really sorry to interrupt. If you can reshare the PPT, sir, it's the same slide is visible.
yeah, actually same is visible. Moving.
Okay, yeah, yeah, fine.
Yeah,
It's
it's moving
moving.
now. It's moving.
So gratuity is payable on uh, sorry, for fixed term employees, gratuity is payable only after 1 year continuous service. And for working journalist, okay, uh, for working journalist, the time limit is 3 years. That is, if the person completes 3 year continuous service, then he will be eligible for gratuity. And for other category, there the same limit is, that is 5 years. Only after 5 years continuous service, an employee will be covered under gratuity. All other provisions such as 4 to 40 days, it will be treated as 1 year, and other provisions are same as earlier. Okay, so these are main important changes under new labor codes, that is code on wage. Now we will see the impact of industrial relation code. Okay, so industrial relation code is basically merged, drafted by merging three acts earlier. That is Trade Union Act, Industrial Dispute Acts, and Standing Order Act. Okay, so this act is purely deals with industrial disputes, trade unions, and standing order only. Okay, we will discuss only important changes under industrial relation code. The first change is the introduction of fixed term employment. Okay, we have already discussed the fixed term employment, that employee was hired for a particular period of time, and that is certain, and it is also mentioned in their appointment letter. So it will be called fixed term employee. The one other provision, the main fact is that the fixed term employee will also get all the benefit which are payable to their permanent staff. Okay, so employer have to pay equal remuneration or equal benefits to fixed term employees also. The next provision is that impact is on applicability of standing order. Earlier, a standing order was applicable on an organization having 100 employees. Okay, now the standing order applicability has been changed, and it will be applicable. Uh, the limit of 100 is replaced by 300. Okay, so on if an employer having let's suppose having 200 employees, then earlier the standing order was applicable to him or to that organization, but now due to the change in applicable limit, that organization or that employer is out of uh, coverage from standing order. So now the impact of out of coverage from standing order is that he has not to he can freely move or freely retrench their employees. Okay, uh, for applicability of standing order, or for an organization uh, on which standing order is applicable, then they have to take specific approval for retrenchment also. Now if the standing order is not applicable, then employer can retrains these employees without taking approvals from standing committee. And other is that he can wind up his business. Okay, for business wind up also, there if the standing order is applicable, then specific permissions required from the authority or concerned authority. Now if the standing order is not applicable, then also the employer can freely wound up his business. So these are the some important changes. One more important change is that for strikes. Okay, so this change was for this change is pro employers. We can say that if any employee engaged or found engaged in any strike or lockout, etc., without intimation to the concerned employer, then employer has the right to deduct his salary, that is 8 days salary, for 1 day absence. Okay, so if an employee engaged in strike, etc., in a day without intimation, okay, so employer can deduct 8 days salary, that is 8 time loss. It will be due to non intimation of strike. So this provision, we can say that is against the employees or employers. Many employers can use that there is no without intimation strike, etc. There are also some other changes under Industrial Relation Code and Balance Acts, that penal provisions has also be changed. There are earlier there was a low penalty like 1,000, 2,000, 5,000, up to 10,000 was there for non-compliances. Now penalty has been increased, that is up to 1 lakh, up to 2 lakh, up to 3 lakh. There are some imprisonment provisions also made, up to 3 months, up to 6 months, as per the non-compliances. Uh, some actions or some non-actions which are needed by employer has been categorized as criminalized also. There are some other coverage which are also changed from these labor codes, that is ESIC coverage was earlier, if we can say that earlier ESIC is applicable only on mandatory basis, not voluntary basis. That if an organization uh, having 10 or more employees, then only ESIC is applicable. Now if employer want to enter into ESIC voluntarily, then also he can enter into ESIC without having that specific limit, that is 10. He can enter if he have 2 employees, then also he can enter into ESIC by voluntary agreement. So industrial relations code has a broader scope, just because employers are now collectively can arrange facilities, such as if for example, in social security code, in through maternity provisions, there are requirement of crèches facility. If an employer is not able to provide crèches facility singly, okay, so now he can combinedly enter with 2 or 3 other employers. Now all of these 3 or 4 or 5, that group can provide purchase facility to all their employees, so it will be treated as compliances. Okay, so this will also benefited for employers, that if there are some huge cost for a compliances, then it can be collaborated with other employers also. mm, Contracting companies, that companies that control subcontractors employees are also categorized as employer. Also, there are some rights which are also enhanced significantly by industrial relation courts, by collective efforts, or by uh, complex employment arrangement. That is also with as per that collectively they can provide benefit to employees, or collectively they can uh, provide they can do their compliances, and it will be accepted by department. So this is the streamlined dispute resolution and industrial peace. Uh, uh, there should be a mandatory procedures that clear dispute resolution protocol must be followed by employers, that is industry, for any disputes. Uh, if the negotiation is possible between parties, then it should be firstly cleared or negotiated. After that only it should be go with tribunals or through adjudication, etc. We have already discussed the fixed term employees and workers benefit. That is, equal benefit will be provided to all the fixed term employees. uh, that is, all benefits which are payable to their permanent or contractual staff, which will be payable to fixed term employees also. uh, they have fixed term employees will also get better social security and wage benefits. Okay. Health and safety, there are some other provisions under operational health and safety and working condition code, that if employer having employees aged 40 and more, okay, then employers have to provide at least one annual health checkup to all their eligible employees. Eligible employee means employee having aged 40 and more. If employee's age is 40 and more, then every employee will get annual free health checkup from employer side, and also employer cannot deduct the cost of health checkup such health checkup in any way from employees. There are also some special provisions for migrant and gig workers, that gig workers will now get a proper social security. They will be their employers will also create a gig workers welfare fund, and employers will contribute 1 to 2% of their turnover annually. Also, gig workers have to register on e-shram portal, so they will get universal account number from there. And there are many schemes of government, they can participate or they can take benefit from that, from there after registration. There is a other provisions, special provision for migrant worker, that migrant workers definition has been changed. uh, Migrant workers are clearly now that they will be eligible for their conveyance also. Let's suppose if an employee was working in between a state border, like is resides in state A, and if he works in state B, and the distance of uh, his residence and the working place is 20 kilometers, okay, so he will get the conveyance also from employer. and employer cannot recover the conveyance from his salary. If there are mm, other employees having from more distance, then employer have to provide conveyance within a reasonable period, that is for a month, within a month or within 15 day. So finally we can say that the all the four new labor codes has been implemented by the government in November 25 also only, and if rules will be finalized hopefully till Feb last or in March. Okay, and from 1st of April 2026, the all four new labor codes will be effectively implemented. Okay, so employers have to clearly check their compliances, check their payrolls, formulate their other registers, like the one mandatory requirement is that now employer have to issue appointment letter to all type of workers, even if the worker is coming for 2 days in their office. Okay, that is all type of workers will get appointment letter, and it is the responsibility of employer to provide appointment letter to that workers. So employer have to check and formulate the policy action plans, which what actions to be taken for early implementation. The role ahead preparing for 2026. First of all, I can say that employers have to check their payroll or their existing compliance system. What are the loopholes? What are the impact of new provisions? And what other compliances to be done? And accordingly, they have to train their HRs, they have to train their other staffs which are engaged in formulation of policy, etc. And they should adopt or follow compliances as early as government notify. Thank you. Now if you have any questions, you can discuss.
Thank you, Chetanji. We have
Thank
some
you.
questions here. Just I will read out. First question is about the responsibility of secondary employer. Secondary employee, is it same as that of the principal employee? Question is quite not clear basically.
Yeah, yes, I got it. Actually, it will be called contractor. Okay, the one who provide the work to other employees called principal employer, and that who do or provide the his staff or other labors, which is called contractor. Also, there are many layers. There can be a subcontractor under the contractor also. So under labor laws, all the labor laws, I can say, ultimate responsibility is with principal employer. Even if you are not paying the wage to their contractual staff. Let's suppose A company is principal employer, A provided work to B. B is contractor and B outsourced to C, D, E, F, whatever the layer is. So even in the last layer of subcontractor, if the employee of that subcontractor was not paid by his employer, that is that subcontractor, then also principal employer is ultimately liable. But not only the principal employer is liable, the liability is with all the employers. Okay, contractor and principal employer both are liable, but principal employer has ultimate responsibility.
Okay, one another question. In the code for gratuity eligibility, 1 year is not mentioned. However, it is mentioned that fixed term employee is eligible.
Yeah, actually, it will be clarified in rules. Okay, so at the time of implementation of new labor code, the government release a press note in which the eligibility was mentioned that fixed term employees will be covered if uh, he complete his 1 year continuous service. But still, if the government can reduce also, the government can, let's suppose, it can be for 6 months, or it can be for 2 years, it can be for 18 months. It will be finalized very soon once the rules will be issued by the government.
Okay, thank you. We have these two questions. We are thankful to CA Chetanji Agarwal for such a wonderful session. Friends, beside direct tax and indirect tax, code on wages is also important. These codes probably be effective from 1st April 26. Mr. Chaitan has explained the concept of national minimum wages, where state can increase the limit but cannot reduce below that. The addition of word resignation under the new code for clearing the dues is also important. New code has given light on sudden labor strikes, voluntary registration under ESI, which is a favorable situation for employer. Thank you, sir. And at last, we express our sincere gratitude to our esteemed professional colleagues who has participated in the webinar and were attentive listeners. We also place on record our appreciation for the CP committee for organizing such a webinar on regular basis, which greatly contribute to the continuous professional development and knowledge enhancement of members. Once again, we thank all our respected professional members for their valuable participation and support. Thank you all.
Thank you. Thank you, Ajay ji. Thank you, audience, for actively listening my session. I hope it will be useful for your clients, or for your, even if you are in job, it will be useful for even your payroll also. So thank you so much.